Well, thank you for joining me, Linda, today on this little collaborative question to help frame why Linda and I are chatting today. Aspire this past quarter just launched our digital magazine, which I was really excited about. It was a long-term project and it was really fun to see it come to life. And one of the questions that we had in this digital magazine for our clients and referral partners was asking them for feedback on what they want to hear. And we actually did get feedback, which I was really excited about because I wasn't fully anticipating a lot of engagement in that. So that was a huge win for us. But one of the questions was, how do the California wildfires affect us here in the Midwest potentially? And I thought that was a great question, number one. And I think with any question, we know if one person has it, usually multiple people have it. And so as I got to thinking about how to answer this question, I thought writing this out would probably be a really dry read.
Okay.
And too like insurance-y to read for just like the average everyday person that's just not looking to intake that content.
Right.
Because yeah, I mean, unless you want to fall asleep at night. So, and so as my wheels got to turning, I thought it would be fun for this to be a collaborative question and to be more of a discussion. And then my friend Linda popped into my mind because Linda is also in the Midwest. Your agency is based out of Michigan. We're based out of Minnesota, Wisconsin. And so we're collectively the upper Midwest. And Linda's been in the industry for a long time and has lots of letters behind her name, way more than my letters behind my name. And so I just thought it would be a good question for you and I to discuss together. And then, it's way more fun to like listen to something rather than to read on a topic like this. So, I am going to just open it up to you first, Linda, and then I'll just kind of we'll collaborate it. So how are you sharing with your clients how the California fires may impact rates here in the upper Midwest?
So for us, that conversation has been going on for many, many years with the floods in Florida.
Mm-hmm.
So we are in northern Michigan. We have a lot of snowbirds who are in Florida right now and come back here for the summertime. So we've had that conversation for many, many years with clients. So what we explain to them is that insurance is not based on a state-by-state basis, the rates that you pay. Insurance is based on what the carriers bring in premium that they then take and invest, right? And then what do they pay out in claims? And when those numbers don't match up, you see your rates go up. So historically, what people don't understand is that in the insurance industry as a whole, historically in the United States, has had 106% loss ratio. So that means for every dollar that they take in premium from us, they are paying out $1.06 in claims. And you think that can't be, they have tons of money. They take all of our money and they invest it. They invest it in the market and property, et cetera. That's where they make their profit. But if all of a sudden your 106% loss ratio is 140, 150%, or you're going to see some astronomical numbers come out of these fires, and they aren't affecting companies that are just in California.
Yeah.
They're affecting, the big one that you're hearing is State Farm.
Yeah.
So they're affecting some major companies that are spread out throughout the United States. And if they can't raise rates in California because the governor has put a stop to that, to it 3 years ago. And that's part of the problem. They were not allowed to raise their rates for the last 3 years when these fires were happening. And so they have been undercharging for insurance all this time. Where are they going to get the money to make the books balance again?
Yeah. Yeah. And I think that perspective it kind of widens our view of, because I think that most people don't understand the kind of the back end of insurance.
Right.
I think a lot of insurance people don't understand the back end of insurance. And so when we can put it in terms like that, you start to be like, oh my gosh. So one of the things too, and you touched on this, and I know this has been the same thing in Florida as well, is that, for most states, the insurance companies have to go to, get approval from the state to change their rates.
Right.
And then so when they're not able to do that, there's all kinds of byproducts that can happen, because then if the insurance company can't rate their products properly so they can stay solvent,
Right.
then they're put in a really tough situation, and which can lead obviously to going insolvent, but can also lead to them just completely pulling out of certain states altogether. And so one of the things that you had mentioned as well is also seeing that overflow or the need to gather rate can kind of trickle into other rates on other products going up because they're just trying to get rate from someplace else, which is also really unfortunate because it almost feels like this is going to be a term that I'm completely coming up with, but it's almost like rate pollution, right? Because you're having to increase the rates where you can to make up for where you can't here. So then the rates don't have, like, there's a loss of integrity in specific rating, right?
Right.
Which is just unfortunate.
And that hurts the consumer at the end of the day. Because
Yeah.
So we saw it happen with Katrina. So when Katrina happened, one of our major companies that was also had a lot of concentration down in Florida, one of our companies decided that they had so much exposure there that they were going to non-renew 25% of their client book every year for 3 years.
Wow.
So they non-renewed 75% of their clients. Those people have to go somewhere.
Yeah.
So you have all these other carriers that are still dealing with this devastating loss.
Yeah.
And you've got all these clients that have to go to them. And what happens to the rates? The rates go up.
Yeah.
Right. And so it really does, and again, we've had it for years here, and we've had some people ask about the fires in California. That is going to be, they're talking 40 to $50 billion of insurance. Those are just insurance costs.
Yeah.
Those are just insurance carriers. And you've got their kind of state plan out there, which basically when you have a community that no one will insure, whether it's a brush hazard fires or it's whether it's a catastrophic flooding issue, all of a sudden you've got areas that people can't get insurance. So they have to go to the state and get what they call a fair plan type thing. This fair plan in California will run out of money by March.
Oh my gosh. Yeah, that's so
They
crazy.
don't have enough money.
Yeah.
They don't have enough money in the pot to pay for all of this. So what happens? All of a sudden, a lot of people don't have insurance, can't afford the insurance that's out there.
Yeah.
And so the carriers, you're going to see your auto insurance rates increase because of this. You're going to see carriers trying to, like you said, doing, whatever they can to get the rate that they need to stay in business and to stay solvent. So if they do have a devastating loss in one area, they've got the reserves to take care of those people. That's what insurance is about at the end of the day, is taking care of these people.
Yeah, bringing them back whole. Yeah, absolutely. Yeah, I think is a really powerful perspective. The second part that I wanted to make sure that we touched on is reinsurance. So insurance companies also are insurance customers, right? So insurance companies have reinsurance. And reinsurance, as Linda and I were just talking about this, reinsurance for all the carriers renews at the same beginning of the year for all carriers. And so we're definitely foreseeing we're going to see issues is the reinsurance. So the insurance costs for the insurance companies to be backed is going to be going up. And I know that is industry wide. That's a conversation right now. Is so really kind of like, okay, well, we know we're okay now through the end of the year from a reinsurance standpoint, but we don't know what reinsurance rates are going to be looking like for a lot of these insurance companies. And the reinsurance really impacts accessibility for insurance for our clients. Like I know I was just quoting a middle market account with one of our larger carriers, and I would say 5 to 10 years ago, this would not have been something I heard, but we actually got a decline on this risk, which is pristine, beautiful risk, brand new build. I mean, like very desirable account. We got a decline on the account because they had to go and double check what their reinsurance costs would be. And it didn't make sense for them to take on the risk because simply of reinsurance. And I just was like, wow, that was a whole okay, I mean, I get it, but it's also just gives you it's a very different perspective or game right now. So,
Right.
tell me your thoughts on reinsurance.
So I think it's important to kind of explain what reinsurance really is. We know because we deal in it and all the time, but basically what happens is when a carrier insures a home, let's say they insure a home, and I'm going to do easy math because I don't like math. They do it for $1 million.
Mm-hmm.
What clients don't really look at is they're not on the hook just for $1 million. They're on the hook for that $1 million, 700,000 of personal property inside the house, right? You've got another 200,000 for any detached structures that are at the property, your sheds and your garages, et cetera. And then you've got another probably 300,000 to pay for them to stay somewhere else while we're rebuilding their house. Yeah. So all of a sudden you've got an insurance company and well, it's only $1 million house. No, you're talking about 2.4, 2.5 million for the entire loss. And that's if no one got hurt or killed, right?
Yeah.
And so your insurance company is going to say, we're willing to take on the first $1 million, but we're going to go buy insurance over here for the next 1.5 million. We don't want to be on the hook for the whole thing. So all of a sudden, if they have catastrophic losses like these fires are, all the reinsurance companies now that maybe sat and paid a claim here they're paying all these claims, right? Because it's massive. And so what's going to happen to the reinsurance rates back to the insurance company? They're going to go up, right? Because they've suffered all these losses.
Yeah.
And so for us, as we look at it and we look at our carriers, the carriers also the first of the year, not only are they dealing with reinsurance cost, they're also dealing with their reinsurance companies saying, like you just explained, I had one that I did that was I think $17 million commercial building for a bunch of Airbnb condos. And it had to go through a reinsurance and it took over 30 days. And this was 2 years ago, 3 years ago to get approved. It would not get approved today.
Yeah.
There's no way a building that massive would get approved for reinsurance with this carrier. So we are seeing things in the industry that we're just not used to. And I've been doing this, 37 years, and I've just not seen the declines and the companies going, we're not comfortable with any property over 25 years. We never saw that before either, right? And that's the thing. All of a sudden, they don't want multi-unit. You've got that Miami, right? That huge condo in Miami that collapsed. You've got that issue. And so carriers are saying for these condo associations and homeowners associations, we don't want those either if they're over 25 years, unless you have major inspections every year, So it's definitely changed the landscape of what we do every day.
Yeah. Yeah, absolutely. Yeah. From my viewpoint, I mean, we really hit on like the two big things that are going, where California fires, how they can impact us here in the Midwest, and also just kind of gave like a mini crash course in insurance rates, because it's a lot more than just your insurance score.
It's a lot more than just your not having claims for 5 years, and that's what clients think. Well, I haven't had a claim in 5 years. Why is my insurance going up?
Yeah. Yes, exactly. Yeah. It's a whole new world when we start kind of peeling back the layers, and it becomes really fascinating. And I guess I would just say that in conclusion would be that I think our industry has such a boring view, like people view it as so boring.
It isn't.
Yes, but when you start peeling back the layers and having conversations like this, you realize how many moving pieces and how it's actually fascinating and very much a fun industry to be in. So
it is. It is. At the end of the day, we just are trying to help clients understand what is happening and then help them do what's best for them.
Yes.
Make the right choices.
Yep. And not also like, I don't feel like this is something to be in fear about. It's just something to be aware of and to know. Right. But we will totally figure this out.
Yeah. Yep. It's been around a long time.
Yeah, exactly. Awesome. Thank you so much.
You're welcome. Take care, Beth.
You too.